Hi everyone, hope you're going well. It's been an absolutely crazy ride in gold and silver. We've seen gold and silver hit near all-time highs, go down by about 10% and then rise back to where it was originally, all in the space of 60 days. In my opinion, times have never been more uncertain in terms of investing, and it raises the question, is gold and silver still a worthy asset to be investing in? And that's what I want to be covering in this video. In this video, I believe that gold and silver is still a fantastic investment. This is not financial advice, it's just my opinion, but I want to go over 5 reasons why I still believe these assets have massive potential. So number one is obviously the currency printing. It's something which still is always going to be around, and gold and silver ultimately protects us from any kind of currency printing. We understand that currently money is based on what we call fiat currency, which it literally translates to by degree or by trust, meaning that it only has value when we have trust in said system. And if I can show you right here, its value comes from the public trust in the issuing government and the economy, and the fact that the government declares it to be legal tender. So the only thing that's backing it is our trust in the system. And right now, I don't have trust in it. And there are reasons behind that theory. And the number one reason being the fact that we're printing so much of it and it's losing so much value. Lately, we're seeing inflation at very high levels. And this is the main reason why. I mean, since 2020, we've seen the currency supply go from 15,000 billion to 21,000 billion. There's billions of dollars there, which basically means a quarter of the currency supply has been made in the past 2 to 3 years. And that tells me that I don't trust something that's going down in value so quickly. And if we're printing such large mass amounts of it, it explains the cost of living crisis that's happening around the world, like why houses are so unaffordable, how it's so hard to live right now, rent and everything else. So with that in mind, we use gold and silver to be able to protect us from this kind of inflation, because it's a true money and it's a true wealth. You go back in history over and over again, and when money is manipulated and it's unfair, we go back to gold and silver. We can go back as far as ancient Rome to be able to see stuff like this, where the money was debased and gold and silver ended up winning out. So that's reason number one for me. Number two is the general fear in the market. Now, as I said, times are uncertain, and right now, I don't like what I'm seeing in the stock market and what's happening there. Things aren't looking great right now, and I want to protect myself from it. So I've got a few graphs to kind of go over my theory. Here's the S&P 500, which is basically the universal thing that we use to see where the stock market that is at. It's the biggest 500 US companies. And this is basically the growth trajectory of it versus job openings. And what it means is usually there's a correlation. It's very strong between job openings and the S&P 500. And they usually go hand in hand. However, what we're seeing is that there's a discrepancy here. It's no longer making sense from 2023 onwards. Now, I looked into this to try and see why this makes sense. And part of it could be due to AI. And the fact that now that we've got AI, we don't have as many job openings and productivity can rise because now we've got AI systems. But I don't believe AI has taken over this much, that we've got this much separation. And this I call bullshit on. There's something wrong, and these two numbers aren't adding up. So I wanted to look at this in more detail and understand why the S&P 500 is acting so strange. And then also another measure that I use is the price to earnings measure on the S&P 500. Basically tells you how overvalued or undervalued it is with the price versus the earnings. In general, the mean value or median value is around 16, 15, with a minimum of 5 and a max of 123, which we saw in the 2008 global financial crisis when things were out of proportion. Right now, we're at a value of 30. That for me tells me all I need to know, that the S&P 500 is overvalued right now, that the price value is not matching the earnings. And when I see overvaluation, that means there needs to be some form of a correction. And if we look in the past, Generally, at ranges of about 30, we see a downturn of some kind back down to 11. And this is how the market kind of works. It has its cycles. And I want to be on the right side of the cycle and be able to be on the right side when it heads back down. So this is something that I really don't like, and it makes me fearful of the stock market. And have a look further into the S&P 500 to see where the value really is coming from. What we did was we can break down these 500 companies and be able to understand what's really creating that value. Now, this is basically the percentage of total market cap, which is like the overall value of the S&P 500, and the share of that by the Magnificent Seven, which are the seven biggest companies right now, which we refer to as Apple, Nvidia, Microsoft, Amazon, Tesla, Alphabet, which is Google, and Meta, which is Facebook and Instagram. So I want to see what's making up the S&P 500 and what's really causing that value. And we can see over time the percentage of the total value of the S&P 500, that is from the Magnificent Seven, continues to go up rapidly. We're now at 36%, meaning 7 companies are making up more than a third of the 500 companies. Meaning the S&P 500 is basically relying on these 7 companies to be able to keep things moving. And it means that ultimately, when these 7 pop, something massively wrong is going to happen. And there was good news today because Nvidia posted its earnings and it did pretty well. If Nvidia had mixed signs, things could have gone nervy. But we're seeing more and more people getting nervous now. People like Michael Burry from The Big Short is now calling out that he doesn't like what's going on. He shorted out some of the AI stocks that are in position, but this is bubble territory, 200%, and I am not a fan of it. This bubble can be explained by this flow diagram, which basically shows why is this bubble expanding so much and why are these 7 companies going up so much in value. So what we're seeing is that these guys are essentially moving money around each other to be able to increase their size. So we're seeing Nvidia at the center of this. Nvidia essentially create computer chips, and that's coming, their money is being flowed around to open AI sources. So the computer chips help the AI, then the AI then gives the money back to Nvidia. We're seeing Microsoft also involved in it, Intel, Oracle, who are involved in databases. And we're seeing money basically just moving around these big companies, meaning it's just a massive bubble that's forming and causing their prices to go up. So when one of these pop, they all pop. And I saw a really good visual which sums it up. It's just a money glitch. We're seeing money continue to move around more and more over time. Number 3, I believe in assets that are undervalued. That's the number one thing for investors, isn't it? To be able to find assets that are undervalued, get into position, and then sell them when they're overvalued and have exit liquidity. So for me, silver still is not even close to its current value. Right now, it's around $51 US, with the all-time high back in 1980 being $52.50, which we went slightly past recently before it came back down. But the issue is back in 1980, the currency had a lot more value. As we went to back in point 1, currency has lost a lot of value now. So that $52 right now isn't actually that much money. So if we were to adjust that $52 in 1980 to where it should be today, using adjustments, this is where the number should be. Using the CPI, the Consumer Price Index, it's $200. Now, let's be honest, I don't trust the CPI, nor should you. It's falsified data where they use a bucket of goods and are able to manipulate the numbers. I mean, an inflation rate of about 4% to me sounds like an absolute joke. We're more 10 to 15%, you can use shadow stats as a reference for that. So I don't trust that CPI value. The median home price, if we're adjusting based on the growth of home prices, we should be at $468. The Wilshire 5000 stock index has it at $2,000. And you can go through these: US GDP, currency in circulation, the M2 money supply, which we were looking at before, $781. And from this, I know that there's something massively wrong and that silver is still massively cheap. And it's not like silver doesn't have demand either. I mean, silver's coming off its fifth successive deficit, meaning that they have excess demand in physical silver oversupply. And it means that we're actually running out of silver. And what we've got here is we've got the balance sheet of silver. And it basically shows, okay, what's the market balance in silver? Is the supply going up and is the supply going down? And what I use is I use the market balance here, less ETPs, where my mouse is there, because I don't want to consider ETF silver or electronically transferred silver. I only want to consider physical silver because that's the stuff that we need to be able to build computer chips, computers, wiring systems, and countless many other things that silver is used for. And what I see here is that we're probably in our biggest deficit yet, minus 295. That rings alarm bells for me, that this deficit continues to get bigger and bigger. They can manipulate it on the ETF side as much as they want. At the end of the day, the deficit continues to get worse, and I want to invest in something that's A, undervalued, and B, running out. We can use other measures as well. We can use the Dow Jones to gold ratio to be able to see where gold's at. Right now, it's running at around 11, where usually the average is at 4. So the Dow to gold ratio basically tells you where stock price is at on an industrial level versus where's gold at. And it tells you basically which one's undervalued and which one's overvalued again. So I noticed that it's at 11, the average tends to be around 4. So with such a high value, that means that now we've got stock prices still way too high compared to gold, and I know gold is an undervalued asset. And to make things a touch worse, the gold to silver ratio still sits at 79.3. And the gold to silver ratio basically tells us what's the price of gold compared to the price of silver. And traditionally what happens is if I go on a larger view, and we see in the past, it isn't able to load right now. But we know that during periods where the gold and silver price is high, the gold to silver ratio comes down in a massive way, and it usually returns to its natural value of around 30. So it got to as low as around 18 during a peak period in the 80s. So I know that there's still some massive correction to come from this, because naturally, if we go back historically, gold and silver sits at around 15 to 1, the ratio. Usually 15 ounces of silver gets you 1 ounce of gold on a historical level. So I know things are out of proportion right now. A value of 80 just doesn't make sense to me right now. And it's probably for me why I personally believe silver is my favorite investment, because it's got so much more upside than gold does. Gold has that safe haven element to it, but silver is just massively undervalued. That's why I like it so much. But that's my personal opinion. Do not take it as financial advice. This is just what I like looking at. I love looking at this kind of stuff, and I love finding undervalued assets. And for me, this is the stuff to look at. Number 4, I like to follow the money. I like to follow where the big players are at and where they're moving their money towards. Now, the biggest money movers are probably your central banks. These are the people that have control of the money and are able to move huge masses amounts of money in a heartbeat. And I'm talking so much money, like in billions and trillions. It makes Warren Buffett look kind of small compared to what some of these big players are doing. And what I'm seeing is that the change in gold reserves is now going back up. It was down back in early or mid 22, and now we're seeing that number pump up again. And we're seeing that countries such as Turkey, India, the Czech Republic, Poland, and China are now buying up in massive amounts gold supplies. And we know that central banks, based off the Gold Reserve Survey, have accumulated over 1,000 ton of gold in each of the last 3 years, up significantly from the 400 to 500 ton average over the preceding decade. So what we do know is that countries are stacking up hard in gold and silver, particularly gold in this case, because the safe haven asset to go to. We also have heard news that Trump has added silver to the strategic asset area, so he considers it to be a critical asset which he's interested in. And we're seeing that in addition, gold's unique characteristics has a role as a strategic asset, and these central banks are getting into it. So when I'm seeing big money and the smart money, as we talk about in investing, move into these areas, it lights my eyes up when I see smart money moving into this position. I don't want to follow what the dumb money and what the retail investors are doing. I want to try and see what the big players are doing. And when I see this, it catches my eye. I also look at people like Warren Buffett, he's in a massive cash position and out of stocks, and Michael Burry, who's shorting his position. So I look at that when I invest. And number 5, the money cycle. Traditionally, as an investor, I like to work in cycles. Gold and silver isn't forever going to be the number one asset. Things happen and things change in ups and downs. So right now, gold and silver, I believe, is the asset. Then there'll be stocks, which I'll go back into again. And things change over time because, as we can see here, money changes over time. And usually it's in a cycle of about 30 years. We start off with the classic gold standard. That's when money was backed by gold. We then went into a period where it was less backed and it was hybrid backed. Then the Bretton Woods system, which basically was where you could exchange money for gold and you could do a swap with the bank and they would agree, to now this, where it's just a float system and it just means that money's on a free market and it has no clear value because it's not backed by everything. I believe that things work in cycles, not just now, but hundreds and hundreds of years ago. Money has had and made its mistakes, and fiat currency has never survived. Ultimately, we always go back to gold and silver because it's the thing that always seems to work over and over again because it holds its value. Now, there will come a point where we go back to the classical gold standard or some version of it where we actually have something that holds money, whether that's Bitcoin or something else. I'm not 100% sure, but there needs to be a correction from the current float system, and gold and silver will be coming across. And I believe right now, this was back in 72 when this was put together. It's well and truly overdue. It's been 50 years where there needs to be change, where usually the cycle period is about 30 years based on the Bretton Woods system and the interwar period. So I believe change is on the horizon. We're looking at a currency that isn't functioning anymore, which kind of goes back to point number 1, but I wanted to show that things work in cycles. I won't forever be investing in gold and silver. I'll be looking to invest into other assets like stocks and going back into it once I believe gold and silver is an overvalued asset. But for now, truly I believe gold and silver is something that we should all be getting into. The opportunity is now, and opportunity is waiting for you as long as you do your research. This is not financial advice. Think for yourself. Think about what situation you're currently in with your money. Do logical research as I have. Look into the numbers and look into what's happening in the world and decide for yourself and your scenario what's the best thing to do with your money. Consider your age, consider where you're at in life and what you should do. I hope you enjoyed this video. I hope I helped you understand what's happening in the market right now, despite all the uncertainty, what's happening right now and what I think about assets such as gold and silver. I'm going to continue educating on gold, silver, and crypto and my thoughts on investing in. I'm going to help you take steps along the way. Leave something in the comment below. If you have any questions to ask me, I'll be free to help you. Right now, my channel is still small. I'm trying to grow it. So any opportunity I can take to help you, just leave a comment below and I'll get to it as quickly as possible. Thanks so much, guys, and I hope you enjoyed this video.